I said, the presentation is going to be about opportunity zones, and we're going to keep it kind of light today because I do want to show examples, and I wanted to really talk about and take as many Q&A as possible. And Shiv will interject me as I go. I'll just be in the zone, but happy to be interjected. I do want this to be a rather free-forming conversation, although I know Shiv knows what the slides look like, so I could be answering something right after you ask something, so it could be appropriate to for me to do that. So go to introductions. We'll see for by myself. What is an opportunity zone and why I should invest in an opportunity zone, and then the history, and then we'll go into Q&A. So as I said, my name is Eng Tang, but my background is a background in economics, did investment banking, went to the Peace Corps, was in analytics, joined Apple and iPhone and music and then Siri. I list all these things out because I want to highlight that I've been a real estate investor since pretty much the beginning of all this. And that's been the one constant for me. And so it's something that is near and dear to my heart, but also as I've gotten, if I scaled up and gotten bigger, I realized there are so many other ways to invest in real estate, as well as save taxes through real estate investing, which I will highlight in today's presentation. So a little bit of history about me. I bought my first rented property in the LA area in a triplex when I was 23. My only regret is I did not buy more in 2009. It was an interesting time because I used to be in finance and financial industry looking at subprime loans. And I knew that properties like this were 3 times as valuable or priced 3 times as much, literally 6 months before then I bought it at the prices. Great timing for me. But the whole point of that is I buy it for cash flow. And I bought out-of-state properties, and I bought properties, triplex, quadplex, pretty much every year or every other year, most in the LA area. And then I started investing passively. And I bought real estate, commercial real estate, which includes multifamily, large scale multifamily in Georgia, Kansas, and Missouri. And since then, and more recently, I've started to syndicate multifamily, senior living facilities, and opportunity zones. And so also, I won't be really talking about any investments today, though I'm happy to bring up them if you guys want to talk about it.
And one of the questions, probably a seed question that I can start off with, is my personal situation. And it's something that I discussed with you 6 months back. And it's probably something other investors will be able to identify with, and especially people who are just getting introduced to opportunity zones. So I have 2 situations. One, as I mentioned, I'm a very active investor in the stock market. So what happened in 2020 was I made some big bets, what's big enough for me, and I have huge capital gains. Some of these stocks have actually gone up twice or thrice. Now I'm in this conundrum. I want to sell to make sure I lock in my profits, but I'm going to be hit with a huge capital gains tax. That's the amount of gains I have. And I want to sell because I have this fear in me that probably the stock market is going to go down, right? So I just want to make sure I cash in on my profits. But what can I do about the capital gains? That's for my stock. Then for me and my wife together, we have lots of RSUs that were given to us, restricted stock units, through our work. And those have actually doubled or tripled over the last 3 to 4 years. I want to sort of move away from having a very concentrated position on these stocks. But again, I have huge capital gains and I don't want to pay the capital gains. So my hope is that through this presentation, you'll see if you'll provide a solution for people like me.
Yeah, and it's one of those things that especially if you're paying attention to the market today and yesterday, when you're losing money or you want to capitalize on the money you've made to realize the unrealized gains, you start thinking about taxes and like, okay, you made money, but you got to pay something, not as much as you made. That's the point of taxes, but enough to maybe make you think twice. And for the longest time, there hasn't really been an alternative solution except paying taxes. You could do a DST that's complicated. I won't go into that topic specifically, and it's very delayed. But And OZ is really a prime way that has allowed folks like Shiv and myself to take those shares of Facebook, Apple, Google, wherever you were working, and capitalize on diversify them and really take some of those capital gains and earnings and defer the taxes on it. So opportunity zones is a new law that happened in 2017, and this it's every state sanctions parcels within that state, and it's really meant to target um, impoverished areas, not necessarily impoverished, but areas that need potentially additional development, additional investment. Although if you're in San Jose and you know the new Googleplex, that's also an opportunity zone. So it's not always tied one-to-one for that concept there. But to really, I mean, basically the three main benefits of investing in opportunity zone, and this is really something I'll reiterate again and again. Three main benefits is one, those capital gains, so those profits from sale of stock or any assets uh, can be deferred if invested within 180 days. And that's deferred up until December 31st, 2026. And that's a hard coded date. So if you invest in December 31st, 2025, you have 1 year of deferment. The second benefit is this step up in basis. And it used to be 15%, but you need to hold for 7 years. That's no longer an option now. But you still have the opportunity up until the end of this year to hold for 5 years until that December 31st, 2026 deadline, where essentially whatever taxes you owed, you would pay 10% less because your cost basis would go up by 10%. So that's not on that. I think the deferral is actually a slightly better thing because for me, I invest everything so I can invest that and get deferrals and pay the same amount, which is great. But in this case, I'm paying 10% less, which is even better. And then for the future, not the current capital gains that you invested, but for any future capital gains that occur from the investment of real estate typically, that gets eliminated if you hold on for 10 years. And that rule actually is allowed up until 2041. So pretty long time. And so you actually could ignore the first two by investing in like 2027. Although I'm sure the IRS would change things up. So this applies for long-term and short-term capital gains. So for those active traders out there who have made a lot of money in this past few years through the volatility of the stock market, short-term capital gains is a really it's very highly taxed and can be deferred in this same manner. Sell businesses as well and real estate, sell collectibles, art. So any appreciable asset that can be classified as a capital gain can be deferred and qualify in the operating zone.
Awesome. I know folks have been asking questions on timelines. We will definitely, through visual medium and through repeated calling out, talk about the timeline. So don't worry about that. We'll talk about what's March 21st, 2021, what happens at the end of the year. So on this, I have a seed question, Eng. So why can't I just sell these RSUs or these stocks and just diversify by just investing in some other stock? It's something that I'm intrinsically comfortable with. Let me just pay the tax and let me just invest in some other stock. Why wouldn't I do that?
You're being such a great citizen, Shiv. I hope you pay all the taxes and I can take advantage of the great nature that the government provides for us, right? That's happening, right? Uh, I think there are ways to still diversify into stocks by taking the cost basis, which is essentially what you want to do is unlock the cost basis and take the gains and then deploy that into opposite zones. And the whole point here is to first introduce you guys to the tax benefits of operating zones and how that really impacts relatively to what you're proposing, Shiv, which is investing that directly into the equities market, which I'm not against. I have a lot of equities myself. I fundamentally believe in a lot of companies and the future of American companies and the American economy. But I also really enjoy having a discount on my investment and having a little leg up on my investment. You know, who wouldn't want to invest with a 23% discount? Uh, any of you guys would want to? I mean, so Tesla went down 8% this today. If it went down 23% more, I could buy it for 23% less, and I would love to buy that. So that's how I think of opportunity zones, and having that ability in that really short-term window here to take advantage of these gains and deploy that and take those advantages would be, I think, a pretty good bet. So why should you invest in operating zones? I think that is, I think that's pretty obvious, hopefully, but I do want to make some comparisons of what Shiv was talking about. If you did have RSUs, which is for some of those who don't know about RSUs, it's restricted stock units, essentially employee stock compensation. Essentially, the company's giving you money. You, instead of taking that and the money in form of stocks, shares of your company, instead of selling that, you just don't do anything with it, and then it appreciates because you're part of the company, and hopefully you've made that appreciate. Now that appreciation is subject to capital gains tax, and if you sell it in long-term form, that potentially 100K capital gains tax is taxed. Now that dark green bar is the cost basis. You can do whatever you want with that. In fact, this helps you unlock that cost basis. If you have a lot of profits, then that makes, you definitely have to be more mindful of it. But if you have a lot less, then really shouldn't mind too much about the taxes, although you should still really just deploy those capital gains anyways. So those gains, if you then invest it into diversified pool of funds, of stocks, index funds, etc., you would have to pay taxes on 23.8%. I believe that's the number. If these are long-term capital gains, if these are short-term, much higher. And so this is federal taxes, by the way. So $24,000 of your $100,000 basically goes away. So now you're starting at 76. And if you're able to earn 15% compounded growth, which is, and I'm just putting that number out there, it's not necessarily the number that the market would do, over 10 years, by that time you made $308,000. Pretty good return from 76. So hopefully this highlights, first of all, you should be targeting double-digit returns and investing. But then you not only tax on the entry, but you also tax on the exit. It's like the anti-401k and Roth IRA. So you're taxed on the exit, and now you're left with $253,000. So really, you've made 2.5 times, which is pretty good in 10 years. A lot of people don't even make that much. You took your 100K, you turn it to 253K. Your cost basis, you can do whatever you want. I'm not even talking about that. But if you were investing to an option zone, you're able to defer those taxes and invest a whole 100K. So that's one of the biggest benefits here. And if you understand how to identify a good real estate investment or option zone investment, then hopefully you're able to earn the same 15% return. You do owe those taxes in 5 years at the end of 2026. That is reduced from 24K to 21K because of the 10% step up in cost basis. And through those compounded growth, the same compound growth as investor A, you created from 100K, paying those taxes, created 383K. And for those future capital gains, there's no taxes on it. So that's it. That's the benefit. You get deferral, get step up in basis, and you get future capital gains eliminated if you hold it for 10 years. So that difference is 3.8 versus 2.5. So you have 50% increase in returns over 10 years based on two assets, stocks or opportunity zone investment that appreciated or grew 15% a year every year. And this is not even talking about the depreciation benefits that you could get from investing in an OZ real estate itself, which would be eliminated after you sell sell the property, because the capital gains and depreciation turns into depreciation turns into depreciation recapture typically, but that is really capital gains, and that gets eliminated as well. I think I might have confused myself and confused you, but basically there's many more benefits than I'm even highlighting here, if
And
the return's the same.
just a quick interjection here. A couple of people have messaged me saying, hey, I'm vigorously taking notes. Do I have to do that, or will you be sharing the recording? We will definitely share the recording and the important dates. I'll come to the dates as well. So you don't need to take things down. We'll definitely share the recording with you.
Yeah. And the math is really, I think if you finally believe in the market, I could also show you what investor A does if to get to a 3.8 multiple post-tax. That's probably likely, I believe, 19 to 20% compounded growth, which is a exceedingly great number, compounded. Most people talk about average growth. So if you look at what the S&P has done from January 2021 to January 2011 to 2021, and if I created February 2011 to February 2021, that 13.5% would be lower. But let's just take those dates. That 13.5% return is an average return, actually, or actually compound return. And so compare that to an opportunity zone that, for example, Tozy Capital recently offered with 16% returns. There's a pretty big difference here. And so if you look at those two comparisons, taking the same slide that we highlighted before, investor A selling stocks and then taking those gains and putting into stocks again and getting what the last 10 years did at 13.5% growth, you then turn that 100K into 24K post-tax. For investor B, who did take Tozy's OZ fund, and they want to sell just Tozy, just look at any OZ fund, take the 100K and turn it into 421K with no tax implications. So almost double the return of if you invest it into the market. So I think it's a very unique opportunity, one of the, I think, rare opportunities. And even without this 10% cost basis, it's still pretty significant. But this year might be it will be the last year that all three of these things are valid.
And if I may ask you to just go to the previous slide where you are doing the total returns, we have a bunch of questions, and maybe this is the right time to discuss timelines. And for people listening in, if your question is not answered properly, or if I've misunderstood your question, please feel free to ask the question again. I'll try to do justice to your question. The first question is, the deferment till 2026, is that a good idea? Don't you think that 2026 tax bracket would be higher? Maybe I owe more taxes in 2026 is a question.
So you nothing count the time value money in here, right? So that if it did go up, first of all, there's no legal writing that confirms or denies whether you'll be grandfathered into the capital gains basis. But let's just assume that it is what it would be in the future capital gains, which could be more. So that's potentially an option. That still means you're deferring it for 5 years, and that 5-year window is pretty long. If you even just put into a bank account or high-yield savings account and earn 2% a year, you still be making quite a bit of money. The inflation eating to that would still be pretty significant. So all these things are still pretty great tailwinds to invest with a 5-year deferral. If I could pay anything back in 5 years and invest it now, I mean, with the way assets are, maybe not today's market, but assets are moving, it's such a big advantage to just delay things. That's why we do 401ks. Why would anyone do a 401k if we could just pay taxes now and then, for most of you guys doing 401ks, the hope isn't that you guys are making less money in the future. The hope is that you can compound your growth at a much bigger rate now, and figure out a lot more tax loopholes in the future.
Awesome. Brandon did have a question on when exactly that deferred tax is due. You sort of answered that question. But we are also duty bound to share with you that we believe that IRS has the ability to actually move that by a few days or months. Is it due as part of the 2026 tax filing, or do you have to pay for it by December 31st of 2026? IRS will clarify. But for all practical purposes, think of it as being owed at the end of 2026.
Yeah. And if I was CPA, I would definitely say that. But I like to conjecture and look at history. It would be unusual for the IRS to demand a very large payment from a lot of people, very wealthy people in power, in a off cycle. They would probably want to pay it in conjunction with your taxes, so likely the following year. But for that's not what the IRS said. I'm just conjecturing.
And just a quick interjection to all the investors. Please ask your questions in the Q&A and not the chat window so that we do not miss out on your question. And before you move on, I have a whole bunch of questions on this timeline. People are asking, what is this March 31st, 2021 extension? When do I have to have sold the stock in the past to meet this 31st deadline? What is the end of the year 2021 deadline? Can you clarify on what date means what?
Yeah. So typically with an OZ, if you sell your stock, and I'm just going to say stock because it does apply for every other kind of asset that appreciates. You sell your stock, you have 180 days to then deploy those capital gains, to take those capital gains and put into a QZF, qualified option zone fund, investment option zone. But with this March 31st deadline, what the IRS allowed was a very long extension. The net effect is if you sold stocks as far back as October 4th, 2019, so way farther than 180 days. So you sold it in November 2019, January 2020, June 2020. All those dates would count if you sold those stocks then and still invested within before March 31st. That window, essentially, that 180 window is very extended. After on April 1st, essentially, is 180 days from before.
So, for example, if I have sold stock in December of 2019, and I didn't know anything about OZs, and I actually filed my 2019 returns, you're saying that capital gains is actually still eligible to be invested in an OZ before March of 2021, March 31st, 2021, but I'll have to go back and amend my 2019 returns.
Yes, so that's an additional barrier. Obviously, I filed amendments all the time, but for those who haven't, it's essentially just refiling your taxes, and however much that is for you guys. Could use TurboTax, but that essentially would take a little bit more time to get those refunds back because you would actually ask for the government for a refund.
And just a subsequent question, what people have asked is, let's say I don't have any stock that I've already sold. On April 30th, I'm going to sell some stock. Do I have 180 days from April 30th to actually invest in a future OZ? Is that right?
Yes.
Okay, awesome. A question that a lot of people have asked the same question. I'm quickly going through that, but another question that people have asked is, when it comes to 2026 and I'm going to be taxed, would that be taxed at the long-term capital gains rate or short-term capital gains rate?
I believe it's going to be taxed at the rate that you owe. So it's very confusing because if they raise rates in the future, does it change it from short-term, long-term? If you move to, I'm talking about federal. I'm not going to get to states a little bit. It's just too much complexity.
So to answer questions from investors, the investor who asked, should it be gains in 2019 and 2020, or can I include my already sold 2021 gains till March 31st? Absolutely yes.
Yeah,
If you've
yeah,
sold something in Jan 2021, absolutely
yeah.
yes.
And you have until June 2021 then. So
Uh,
yeah,
for the investor who says, I sold my stock in May 2020, am I eligible to invest? Absolutely, but you have to do it before March 31st,
yeah.
which means you should have transferred your fund into a qualified opportunity, opportunity zone fund before March 31st.
Mhm.
To the investor who's asking, is it extended through March 31st for my capital gains to invest in OZ? I think we have answered your question. To people who are asking about timelines, I think we've answered your question as well. There are people asking me if SD IRA funds are eligible to be invested in an OZ.
They are, but I don't know if I don't think it would be the most efficient way to invest because your capital gains are deferred anyways in a retirement plan, typically. I, I believe that's always the case actually. So that wouldn't necessarily be the best use of investing in SCRA. Obviously, investing in an OZ should still be a good investment. So ideally, if it looks like a good investment, regardless of the OZ benefits, um, then potentially that could be an option. Although some OZ funds only take qualified capital gains, so just ask the fund manager. Typically, that's what we do as well.
I'm having lots of questions, and I know we're not able to move forward, but do you agree with me that the questions are more important?
Yeah, yeah,
And it's also because it seems to be going around the same topic. An investor asks, if I have short-term capital gains now, can I invest that in an OZ and get the tax deferral? I think we've answered that yes. It
yeah.
really doesn't matter whether it's long-term or short-term, but what kind of gain it is sticky. And that's the kind of gain you will be taxed on in 2026.
And if you have short term, then it's more imperative that you do deploy handicap OZ. I mean, at 39% discount, I would love to buy Tesla at 39% discount. I mean, you gotta kind of f up that investment to not not make a good return by having that much of a head start.
Um, I have another interesting question, which says, I actually sold my stock and reinvested in some other stock. Can I sell that and reinvest in an OZ to get this benefit? Now, what this means is different. Go ahead, Eng.
Yeah. So the iris does not trace your cash. It's not like Bitcoin where it says this goes this wallet, goes that wallet. It doesn't care where the money goes afterward in interim, because you could essentially have made, you could have done that, and then you made salary, you have disposable income that replicates your capital gains. Take that cash flow from salary or wherever you're saving and deploy that and claim that's the capital gains from the sale of stock. So, um, so basically, if you did what you were proposing, you essentially be doing the same thing. So yeah, you could be doing that. You could just loop around. You still create a capital gains, right? If you take your 1099, not 1099, Schedule D or Schedule C, can't forget,
D,
D
D.
form, you will probably show capital gains, and they don't really care. They'll tax you at the aggregate level. So it's very similar theory here. They take it to aggregate. They don't really care where to jump from here or there.
Um, to all the investors on the call, we'll make sure we'll answer your questions, even if we do go over our time. So please be patient because we have so many questions coming in. Well, one of the investors asking, and I hope I understand the question right, Eng. The question is the 10-year mark the earliest the opportunity zone investment can be sold to save taxes?
So you're saving taxes by deferring. That's the deferral. And then you save taxes at 5 years. If you sold in 5 years, you would theoretically have to pay those capital gains, but you could, you could deploy that that opportunity zone capital into another opportunity zone fund within a 12-month window. You have 12 months to identify another QZF. You just take the QZF. So, there's every QZF basically is a fund that you put your money in as an investor. There's a QZB, private opportunity business. That's the real estate asset typically. If you sell that, you make a bunch of money. That money goes to that fund. You then take the fund, go look at another OZ, deploy it within 12 months, and that window counts. So you could actually sell the next thing in 5 years and get a combined 10-year window. Most people don't do that because there's a lot of work. And you know, you would, it's an interesting proposition. I think most people bake into the fact that you are going to hold for 10 years. But that's definitely in the books as something that's possible.
And a few investors are asking, oh my God, we have a doomsday when it comes to December 31st, 2021. After that, I cannot make use of any benefit. So can you, for our benefit, recap the 3 specific tax benefits that you talked about and what goes off after what day?
Yeah. So the first benefit is a deferral until December 31st, 2026. So in January 2022, you still get the deferral only up until December 2026. So if you in that benefit still applies for any investment before that date. If you invest in 2027, you don't get that benefit. The second is this 10% step-up cost basis, essentially a 10% reduction in your taxes when you owe it in December 31st, 2026. You have to hold it for 5 years for those capital gains to be adjusted by that. So the last day to hold it for 5 years within that window is December 31st, 2021. So this year is the last year to get the 10% benefit. I had the same inclination in December 31st, 2019 to invest in an OZ to get the 15% benefit. I could not find an OZ to my liking at the time, but you know, it was something that motivated me as well. I would imagine a lot of people would be motivated, and like myself, to invest before the end of this year to get a 10% benefit.
Thank you so much for that. A lot of questions on Tozi's OZ fund, but we will come to that later, and how people can invest. But I just want to make sure all timeline questions are answered first. An investor is asking, to be clear, we just have to invest into a QOF by 331 and not necessarily into a QOZ. Am I correct?
A QOF is a qualified opportunity zone fund. If I believe that's what you're saying.
Yes.
And the fund allows you to start a 10-year clock and start that deferral. So that timeline of funds transferred and fund deployed is critical. It doesn't necessarily need to be in a QZB, which is, I think, what you're referring to, because a QZ is basically a qualified opportunity zone. That's just the area that you need a qualified opportunity business needs to be in, 70% of it at least, to qualify as a business investment. So I believe you're talking about it synonymously. But yeah, so you actually have 31 months if you invest in QZF, put your money into QZF, take those QZF, you have 31 months to then deploy into QZB. You would have to identify by that time. So but that also means that your money is not being productive to hold 31 months. So you rather just put your money in the QZF and then deploy it immediately. So hopefully the QZF has a QZB plan. The fund has a business plan.
I think that's absolutely important, right? And I wanted to ask that question on how should people select an opportunity zone investment. From an investor perspective, and often Eng talks, when he uses the word you, he's talking both as an investor and as the sponsor. For an investor, you have to make sure your money is being deposited into a QOZ fund by 331 if you've already incurred capital gains. Then the fund should be investing, and it's got a timeline to invest. So it's always important to make sure that you have a very good idea of what your sponsor is trying to do with the fund, and they're not just sitting on the money and wasting time. So
Yeah.
that when it comes to distribution.
Because
There's a very-
because we have to qualify biannually our QZF so that your funds are solid. So we spend a lot of effort and time and resources on experts, tax attorneys to help us do that. And so it's very imperative that you invest with someone who knows all that, but also who has a business plan in mind.
To all the people on the call, again, lots of questions coming in. We will make sure we answer that. And there's a very interesting question. And I'm also very interested to hear about this. It says, and just for your information, the slides are off. Maybe very shortly you will need the slides because the following question says, isn't the new president looking at removing the OZ code? In case OZ gets removed in the future, does all the current OZ investment be grandfathered in? I think the question is clear, but I also wanted to seed it with another sub-question. What's the history of OZs? Is a particular political party behind it? How did this come about? And is it something that somebody could just sign on a dotted line and say no more OZs?
I believe the spirit of OZs means that it would be unlikely that it would be removed. And the history is very important. And so let's talk about history because the history tells us potentially what the future looks like. It did originate as part of the 2017 Trump tax cuts, but there was a basket of things that were there, including bonus depreciation, one of my favorite things. It originated through bipartisan support with Senators Tim Scott, a Republican, and Senators Cory Booker, who was the main advocate of it, a Democrat. They were looking to really deploy, real estate capital or capital in general into developing neighborhoods that needed additional infrastructure and investments. Now, a little side note, if you dig into the history of opportunity zones, Sean Parker, ex-president of Facebook, was one of the lobbyists for this thing. And as you can imagine, someone who used to be president of Facebook and have a lot of Facebook stock is very self-motivated to identify, ways to not pay that, and potentially also take those funds and invest into neighborhoods that do need investments. Ideally, that's a part of why all these investments as well. So this actually was a story of my friend told me that essentially Sean Parker and lobbyists paid around $16 million total. I think Sean contributed $1 million. Great ROI. I mean, that's why he's a billionaire. And now he looks like this. Great. That's what $1 billion does to you. And so this history is really important because, first of all, it shows for people in the Bay Area, or just people who have a lot of stocks and get compensated with stocks, was very imperative, not imperative, but just very impactful. Second, bipartisan support means it's hard to dismantle. It's not like it was something, it was 50-50 down the line and Democrats, vote overwhelmingly against it. This was a subsection of Trump tax cuts, but it was it was something that was meant to really help struggling neighborhoods. What I've heard talking to other OZ fund managers who have talked to Cory Booker since, is that some of these OZ funds are being used to build sparkling sky rises. There's quite a bit of stuff planned in the option zone in San Jose. This doesn't seem like something that would help disaffected neighborhoods, but it does seem to be very profitable. And if you sell it in 10 years, you don't pay capital gains taxes on it. Amazing. So I think there could be an alignment into something that makes it a little bit more socially good, justice oriented. But that is hard to really measure, as well as most things I find from the IRS is usually grandfathered in if things happen in the past, it's usually grandfathered in for the future. So in general, my feeling is, at least for this year, I don't think anything's going to happen. I think in taxes across the board as well. I think the government is really focused, administration is focused on the pandemic and stimulus, and then probably social justice. That's probably the order of importance. Although really, the administration have shown that they can use, they're really moderate as well. So another thing that real estate investors have been cheering on.
Thanks, Hank. To all the people on the call, there are a bunch of questions which talk about actual OZ investments. What happens when you do an investment? What's the distribution like? So please stay on for the call. The next 15 minutes might have very interesting questions that you'll all be interested in. So I want to go to the questions that talk about people and their OZ investment itself. An investor is asking, how do I find an opportunity zone near me and potentially other states? Is a question, but I want to seed it with a sub question. Can I just go to any OZ investment and just put my money? Are they all the same? How do I find an OZ investment?
I'm going to assume that you're referring to just investment fund or something that,
yes, yes.
Instead of just buying something yourself, which, we can talk about that as well. This is still an investment. This is still a real estate investment. It has all the qualities of being a real estate investment, except mostly it's almost always construction. But construction development can be good and bad, and it's potentially hard to identify the difference between two. I still think that it should first be a good investment by itself, standalone. It should be something that even without any of the tax benefits, which in the beginning is a deferral, and then second is a elimination. But for most real estate investors, I have 1031 exchange options. I have lots of options to not pay taxes going in or out. So for me, and most real estate investors of my ilk, of people I've talked to who aren't in the Bay Area, who don't have lots of capital gains from stocks, they don't really care about OZs. That's something that it's just I talk to them about OZs all the time. They say, yeah, they have 1031 exchange to like not pay taxes on the going out. They have like the bonus depreciation, not pay taxes going in. They have lots of ways to not pay taxes because they're always investing in real estate. Real estate is such a tax advantage strategy in general. But so for me, I think you should always think about an investment as a good investment to start, and the tax benefits is icing on the cake.
Got it. The next question from people is, let's say I invest in an OZ fund. Does it have distributions? And if so, how are they taxed?
Yeah. So if an OZ fund has distributions, which is very dependent on the type of investment, sponsor, etc., it will be taxed. If it's cash flow, it would tax as passive ordinary income, which typically, if you're also investing in real estate, you're also getting a massive amount of depreciation, and that depreciation will offset your income, so that generally doesn't get taxed. But if you had so much profits and you use all your depreciation for something else, you would be taxed at that earning. Now, if you're getting refinanced out to capital return, that does not get taxed.
The next question is, I'm not sure if I understood, but I'll try to portray it in the right way. Why should I invest in an OZ fund? Why not just invest in real estate and deduct the expense? But you're losing out on the tax benefits, right? On the capital tax benefits. But if I missed something, please go ahead.
No, that if you invested in real estate with capital gains from stocks, you don't get the same, you have to still pay the capital gains tax. Now, if you have so many other depreciation benefits and you're a real estate professional and you have all these great ways to eliminate that, that's great. Or you could say, I'm going to do an OZ as well and take and retain those depreciation benefits, because eventually you get paid out. And hopefully you made so much gains that you will have the problem of actually having to pay taxes eventually. Good for you if you did. That's, I think that's still a paramount concern, that you still have to pay, especially to sell stocks. If the other question is, why should I invest in an OZ fund versus doing it myself? I think there's a lot of administrative costs to qualifying. It costs TOSI, for example, $25,000 just for the tax attorney fees to qualify it. These are specialists, and that's just the first upfront cost, and there's $5,000 of annual qualifications. And it's easier done at a scale at a fund level. I don't think they'll necessarily give a discount for something that's $1 million or $2 million fund versus like $100 million. I think it's sort of same paperwork.
Thank you. The next question is there a minimum amount of investment in a QOZ? I think the investor means in a QOZF. Is there a minimum amount of investment in a qualified opportunity zone fund?
Yeah. So I'll in the Tozy Option Zone fund that we'll be launching in next 2 weeks, we will have both a 1% return after 2 years. So at the end of 2 years, you get 1% monthly return. So 12% year. I was talking about the 2 questions ago. And the minimum for that one is only $10,000. Really, these QZFs and these option zones are really a favor for our investors. I hate it when people have to pay taxes unnecessarily. A 10-year hold isn't necessarily, my favorite thing in the world. I love to just continue to find great opportunities, but the 10-year is such a great benefit from a future capital gains. It's irresistible. So a lot of our investors come in at irregular amounts because that's how much capital gains they have. Put in the amount that you owe in capital gains so you don't have to pay taxes. That's my advice on it.
Awesome. There are a few questions on why I'm being the moderator and what's my role at Tozy. I'll definitely talk about it, but I'm here as an investor and a great well-wisher for Tozy Capital. But let's go to the more important questions. I'm not sure, Eng, if I understood the question. The investor asks, can we leverage our investment of OZ? Of course we are leveraging, but maybe I missed something. Please go ahead.
Yeah, so if you're investing by yourself and you invest in real estate, you should be leveraging. You don't have to, but you should be. And for all of our QZFs, we're leveraging as well. For example, we have a senior living facility that we bought the land for. Bought for $1.6 million. We are then taking a bank loan of around $10 million, putting an additional $1.3 million of capital to then build out around a $13 million facility that then sells potentially for around $22 million, $25 million in 10 years, depending on where that market is. We're taking a 65% leverage. And so we're taking leverage for you on that basis. Though it's guaranteed by the fund, not necessarily by the individual.
We have 8 more questions to go and we have 7 minutes. We will be going over to make sure we answer all the questions, right, Eng?
Yep.
The next question is, instead of investing in the fund, can I invest as an equity holder or just like a partner?
So if you're investing in the fund, you're a shareholder of the fund. And as a shareholder of the fund, you're a limited partner. And you want to be a limited partner because if you're a general partner, which it has benefits as well, you typically have to sign on the loan. You have to be actively participant in it and managing it, and it should probably be your full-time job. If you're a limited partner, you get all the tax benefits of being a partner owner and the return benefits. And be able to participate in that way. So it's, you in any OZ, you can be whatever you want that the fund allows, or if you did it yourself to allow. So I think it really depends on the investment overall.
One of the investor asks, can you explain more about the 1% per month distribution? So that was not for any QOZ fund in the world. That's not a rule. Eng was specifically talking about a TOZI in a QOZ fund that returns 1% per month as one of the options. So that's not a generic rule across all QOZFs. That was Eng's specific explanation about a fund that he was managing.
Yeah. And I want to also highlight that that's just generally, I like to have my OZs very similar to all my non-OZs. And as in Tozy Capital, we have non-OZs with no tax benefits. We have OZs. And in general, the returns on both are very similar. We have 12% returns in one, 12% returns in another. We have 1% a month, 1% a month. So it's not like an OZ gets you less returns just because you get tax benefits. It's the fact that it's has usually be 10 years. The other one's usually 5 or 3 years.
And there's some very interesting questions. So please, investors, do stay back because people are asking about risks and downsides as well. And we want to address that. I'm just trying to club the questions together so they are all the same topic. So please bear with me. And another question that I did not personally understand, an investor asks, can the percentage return of the OZ fund be negotiable?
Everything is negotiable. If you are coming in at 1/20% of the fund, you might have less leverage. If you come in with the full funding, you might have more leverage. So if you're asking me if it's negotiable, yeah, depends on your funding amount.
I think this is probably the right time before we go to the next set of questions. A whole bunch of people are asking, give us an overview of a TOSI OZ fund. Is it time bound or can I just hold for 10 years? Can you give me an example of an OZ fund from TOSI? When is the next OZ fund from TOSI? Or do we have to contact anyone specifically to know more? So a whole bunch of questions about the next TOSI QOZ fund.
Yeah, so we've been working very hard on identifying some new opportunity zone sites that make economic sense as an investment. So we will be announcing in less than 2 weeks our latest opportunity zone fund. It will be actually three, one already under contract, three sites that we will build senior living facilities, which outside OZs, we are doing multiples more. So like as a non-OZ asset, I still love it. As an OZ asset, I actually love it a lot because you get a 10-year horizon into the senior living market in 10 years is amazing. So this is, we're going to have this structured as a pref equity return where essentially you can get for the first 2 years, no cash flow because of the construction period. But then at the end of 24 months, you get 1% a month as one of the options for 8 years. And you get so much depreciation in that third year, you will not pay taxes unless you use it for something else. You will likely not pay taxes on those cash flow for the full 8 years. And then you don't have to pay taxes on the capital gains going out. A great opportunity. So that's 12% returns. There's another option. There's a 6% and a 16% number. It's a little more complicated, but essentially you get more, but you wait a little bit longer to get it.
Since a few people asked, yes, I am Shiv and I'm completely in my role as a volunteer. I'm not getting any financial benefits out of moderating. I am an investor in TOSI deals, just like most of you would be. And I'm doing this completely out of my interest in making sure I get educated and everyone gets educated. And maybe a moderated webinar is a little more interesting. And that's about it. I think this is probably a good time. We'll make sure we'll do all the questions because some are very specific questions. An investor is asking, that's all good, but what are the risks and downsides of investing in a QOZ fund? What can go wrong?
So there's two associated risks. One is, what is the risk of investing in any real estate? I think that is both a macroeconomic risk, which I think is probably more fundamental and is more out of control. And then with an OZ fund, typically it's construction. And so what typically the risk of construction of any OZ fund is time delay. People can want and wish that this will take 12 months, this will take 15 months, you build in a year. But there's always a government official here, a government official there, giving you permission, giving you allowances, giving you authority to go ahead with project work because you need a license or a permit. So usually is a time risk is what I'm saying, but that's more associated with any construction project. That's generally what most construction projects have. And with any time risk, that means if you have staff, if you have any materials waiting, that does cost money, and you're not being productive with your money. So that's generally the risk of OZs.
Thank you. And did you answer the question on how can people get to know about TOSI's next opportunity zone fund? Do they need to contact anybody specifically, or would you be reaching out to investors?
Yes. So after this webinar, I'll be emailing everybody the recording. And of course, it'll be coming from my email, so you can feel free to reply back. And then you also can get on our Ryan's Director of Investor Relations web calendar and ask him about our upcoming deals, and he will be more than happy to help you guys out.
Okay, thank you. To the investor who asked about deferring of tax for 5 years, and is there a 10% reduction? We have explicitly handled all of this during the last 1 hour. We'll be sending you a recording of the webinar. So once you just watch the entire recording, your question will be answered. In the interest of time, we don't want to repeat that answer again, and I apologize for that. How often is a OZ offered? Go ahead.
Yeah, I wish I had more OZs. I am always looking for OZs. I am looking for them, but they are very restricted in geography. They don't make it everywhere that is a good investment area. And if there was a good investment that's not an OZ and a bad investment that's an OZ, I would rather get the good investment. So I still have worked. We have worked very hard to identify some good ones to have the fund ready for the March 31st deadline. So that will be available very shortly, and we will promise that everybody in this room will have at least a chance to review and invest in that. And then going forward for the rest of the year, I am still working on identifying some more OZ investments, and so I to ask me every month. I'm always trying to look for things. I don't want to necessarily promise anything that I can't deliver on, because usually finding and doing any real estate deal takes quite a while. And I've definitely been disappointed by myself on stuff that's fallen through in the last minute.
Thank you so much. I have 8 more questions, actually 10 more questions. We will go through all of them, so please stay back. If you asked your question, it will be answered. There is a follow-up on being a limited partner. The question is, let me read the question as such, maybe because there's a typo in that. Limited partner follow-up question. Limited is return 12%. Is that negotiable?
We talked about that before.
Yeah.
Yeah. Everything's negotiable in life. If it's negotiable with me, I don't know. Well, it depends on my mood.
There are some very interesting risk questions, so please stay back. Can I set up my own fund to purchase an existing business that is in a QOZ?
Yes, you can. Remember, the business cannot be a sin business, so it can't be a golf course, can't be a wine, anything that sells liquor or cannabis or anything. But yes, you can. You can be very creative in this space. You don't have to necessarily invest in a fund. You can set up your own fund. You can invest in a small building, and instead of doing ground up construction, you can just put a lot of lavish interior decorations, and and it has to be 100% capital improvement. That's another way. That's basically one of the primary ways people qualify opportunity loan funds, by buying it for $1 million, putting then $1 million worth of capital improvements into it. Typically, just land and they build something on it.
There are a whole bunch of very interesting questions, and this is very important. One of the reasons I really enjoy talking to Angus, he's very transparent about what could go wrong. And so I think the next set of questions are very, very important. So if you're interested in QOZs and QOZFs, please stay back. The question, I'm trying to club a whole bunch of questions, right? I have invested in a QOZF, and I wanted to make sure that I get all the benefits, the 5-year cost basis benefit, the 10-year no capital gains benefit. But what happens if the fund decides to sell after 4 years?
Yeah. If the fund decides to sell after 4 years, you can personally take your funds and invest it into another QZF. Now, it's more ideal that the QZF then invest into another QZB, but you still have the opportunity to then invest your funds, take yourself out of QZF, put into another QZF. There is a lot less, I mean, there's very little precedent, so it's hard for me to describe things. Using the IRS, it's just like the judicial system. They rule on precedent. And so something new needs to happen before they can rule on it. So it just hasn't had the timeline to do so.
Thank you. Interesting question, but a very valid question. What happens if Tozi or any other intermediaries go bankrupt?
If Tozi goes bankrupt, it's not really. I think the question there is, what happens if I go away, or if I fail in my other investments fail? In that case, we have these LLC bubbles, and that's why we have a fund as an LLC, we have a business as an LLC, and it can't be pierced from outside forces, from financial or legal, or at least from a legal. For Tozi, we do typically have a chain of command. We also usually have partners that are also on the ground operators for us. So they generally will have most of the day-to-day management responsibilities and help with anything that might happen. With any real estate investment like this, including QZFs, if you can always vote out the managing member, myself, for example, if we did something unscrupulous or just didn't like me, with a supermajority vote, that should be in the PPM. That will be in the PPM of the QZF. PPM is a private placement memorandum, the document that dictates what we can and can't do with the funds, what we have to provide, and this is reported to the Securities Exchange. Because you're issuing securities, you're buying shares of a stock or LLC that owns real estate.
Got it. For people who might want to drop off but have asked the question, how do I know more about Tozi Opportunity Zone funds? Are there specific instances of previous funds that have been completed that you can share information on? How do I be in touch with you? How can I get updates? For these questions, I think the single answer is, after the webinar, you should have an email that will tell you how you can follow up with Tozi Capital, with Eng, with Ryan on specific questions on past funds and how you can stay in touch and get to become part of their newsletters. So that will be done.
Should I share the old fund?
Let's just go through the questions for people who are interested in looking.
I mean, just the link on chat.
Yes, please. On the chat window, Eng is going to share with you the QOZ fund from Tozi Capital that's already part of an active investment. It's part of your chat window, but feel free to reach out to him or to Ryan if you have any questions. There's a very important question for you, Eng. How much skin does Tozi put in these OZs? Or is it just a vehicle for us to invest?
So OZ is a bit trickier than most other real estate investments because they have to be capital gains for the QZF. But that doesn't mean the QZF is the only thing that owns the QZB. So in most cases, we have our partners, like Shahid in this case, don't have capital gains because he doesn't participate in the stock market. And so he invests his own money that's not a non-QZF. I also invest my own money. I invest my capital gains. In almost every investment, I'm the largest investor. I like to think I love every one of my investments, and every one of my investments are essentially things that I would invest and do anyways. And that's really my primary motivation, to get cash flow and tax advantages, and that's why I love OZs. So I think generally we do have a lot of skin in the game. Personally, I do. And additionally, a lot of our partners and our team members generally have invested a lot of capital as well.
Thank you. We have 6 more questions. A quick question for you, Eng, personally. An investor asks, we would love to talk to Ryan, and I'm sure it will add value, but is it possible for us to talk to you, Eng, so that we could ease our anxiety?
I'll be happy to accommodate folks who want to talk to me directly. As you can tell, I love talking about real estate in Texas. I should just do a clubhouse on this. Um, I've definitely
There's a question
hosted.
on that as well.
Yeah, I should probably. I have done like Q&As for like 18, 20 people at a time. I love. I love all these questions. By the way, you guys are asking. A lot of these questions also like Shiv asking isn't something we've talked about in the past. So I should do much better and spontaneously as well.
Awesome. We are down to the last 5 questions, but please keep your questions coming. An investor asks, and I hope I've understood the question correctly. Does an investor get to decide whether they want to invest for 5 or 10 years? Or
Yeah.
are there different funds for different time horizons?
I have never seen an OZ fund that states less than 10 years. That doesn't mean those won't exist or those won't happen. It's just the intention of OZs because of the 10-year window is so lucrative, and to dissipate or to disrupt that for something that isn't necessarily exactly known from a IRS perspective, it is stated. It's just unless someone does it first, no one knows how they're going to do it next. But you personally could actually exit the fund if the fund manager allows you and sells your shares. Because with any real estate investment, if you after 1 year, it's pretty easy to exit because it's still securities within an LLC. So you could sell your shares to like Shiv, and if Shiv wants more shares of that fund, he will buy it for you. And if you offer him for a good price, he'll probably buy it in a heartbeat. So these are secondary liquidity potential options, but there's no like exchange where you can just sell, buy, and sell. But in general, these things are available. I've seen it. It's not widely done. It's not, there's no we're not going to like appraise the value of the property and tell you how much your shares are worth. It would just be a negotiation.
Thank you. Some more interesting questions. Who does the tracking for the 5-year 10% tax discount? Is it the IRS? Is it the accountant? Is it Tozy? Or is it me?
It is you and the IRS, because you will be filing that form. And if you invest with us, we will be sending you all the forms that you would need to understand how to self-file. You'll be submitting a form basically saying that you sold Google shares, made $1 million. You then took that Google share capital gains and you invested in QZF in the same document. And so that will be on your record in the tax records of history, so that in 5 years, the IRS will know you. Whether they can trace it back and do it, that's more of an administrative question. But you will know it as well. Same thing with depreciation. Sometimes you just forget, like, how much did I take advantage of depreciation? Like, you bought like 7 years ago. Like, where is it? So it's on YouTube, remember, and find those documents.
I think this is a question where I can add my insight as an investor. As an investor, you just need to do 3 things. Make sure you make note of which sales, which capital gains you are moving into a QOZF. Make note of that yourself. 2, ask your sponsor, like Eng in this case, for the EIN of the QOZ fund. I've already got the EIN from Eng for the QOZ fund that I invested in. You just need to enter these 2 in the year in which the sale has happened. So if you sold in 2020, when you file your 2020 tax, say these are the gains that I want to defer, and this is the QOZ fund that I put my money in. Then just put a note on your calendar saying I owe this money in 2026 and track it, and that's about it. And that's your responsibility. But from what Eng has done, I've seen the questions they have asked me when I invested in their fund. They seem to be having a methodology where they can actually guide investors through this process, because we all tend to forget. But it is our responsibility. Unfortunately, the number of questions are increasing, Eng. I'm sorry about that for everybody, and all the investors are still there. An investor asks, how do you open an account to park your capital gains? Do you just go to the bank and ask to open an OZ account? I'll just give Eng a break here, so if he wants to have some water, and probably I can answer the question. You don't need to do anything. You just sell your stock, your capital gains are in your brokerage account. When you work with a sponsor like Tozy Capital, who's got a QOZ fund, you just transfer the money to their QOZ fund. You just mark that these funds have gone into the QOZ fund, and that's all. You don't need to open any kind of special bank account if you're an investor. If you're the sponsor yourself, then it's a whole bunch of stuff. Am I right?
It's typically an LLC, and you have to have a special, very special operating agreement, and then you have to qualify with the IRS twice a year.
There's a question. Who's your CPA? Or can you recommend someone if you decide to invest with Tozy?
This is a great question. I have lots of CPAs. Depends on what I'm needing them for. Specifically for this one, we have Steve Robinson, and he's one of the top CPAs or tax attorneys. Not really a CPA. He's a tax attorney for OZs. And I will be doing, hopefully very soon, within the next 2 weeks, a live Q&A with him. And hopefully you guys will be attend. If you guys are on our list, we will invite everybody to attend, or at least for the investors, I believe. But we'll be saving the recording.
The rest of the questions are equally important, so do stay back because an investor asked a very important question. I was surprised this didn't come up. So as a limited partner in a QOZF, do I get a K1 or a 1099 at the end of every year?
Yeah, you get a K1. If you're in a partnership, you typically almost get a K1. You get a real estate, you get K1. If you own business, you get a K1 as a partner, passive partner. So it's a K1.
But to investors, there are QOZ funds, as it's called, where you could invest and you could get a 1099 in other places. That's not what I've seen typically at Tozy Capital.
Yes. So those typically, REITs are, do not get K1s. So that's a 1099.
An investor asks, do limited partners have limited upside other than the advertised returns?
So I believe Badre is asking, can I get a little more? He's asking, are there additional upside? Yes. It really depends on the investment. There are pref equity investments that essentially the thesis of this is I want to provide our investors a high predictable return that would probably be very similar to we did a profit sharing model. Because in a profit sharing model, we had to take fees up front, we had to take management costs. In the private equity return model, I am an investor with you, but I am a secondary investor. I get the variance on the upside, but I also don't get anything if so all the fees are eliminated typically, and basically the investors get a pretty predictable and safe return that's typically very similar. And feel free to look on CrowdStreet or other platforms and find opportunity zones. They will typically have something similar in terms of return style, because they're usually investing in fancy high rises in San Francisco.
Thank you. Some of the questions are very deep business questions, so I'm deferring them because they might not be of interest to other people, but we will definitely get to that. An investor asks, is the 1% per month return that you talked about, is it guaranteed irrespective of occupancy rate?
I think it's more guaranteed irrespective of occupancy rate, but it's not guaranteed irrespective of everything else. As in, the business could fail, real estate could fail, all these things could fail. It's not like it's necessarily corporate guaranteed, and really the corporation could fail that holds it. So occupancy rate is a leading indicator for cash flow, but there's typically cash reserves for almost all these real estate investments, typically 3 to 4 months of cash reserves. If you're doing it right, even more. So that's how I usually operate all of my businesses. And even when I have excess cash, I don't want to necessarily spend it or distribute it right away, because I want to make sure I can survive 3 or 4 months of decreased occupancy.
Okay, thank you. An investor asks a question, how much does Tozy invest in these OZs and sustain throughout the period? Or is it just a vehicle to invest? I think you answered that.
Yeah.
But I just wanted to make sure that the question is addressed. There is an interesting question which says, in the example, and by this the investor is talking about what Eng shared on the chat, the QOZ fund that Tozy Capital has. In the example you gave regarding investing to build senior housing, are we essentially in just building the property or even follow-up actions like managing the property as well?
It's going to take less than a year and a half from ground break to build the property. So we have another 8.5 years to do something. And the something is where you make the money. So we're going to lease it up, operate it, and that's where our partner comes in, who's an expert and manages and built and operates 30 plus of these facilities. Very cookie cutter, which I love. Building the first iPhone is very expensive. The millionth is cheaper. So building the 30th or the 35th senior living facility is infinitely cheaper and less costly than the first one because you learn so much. And I love to invest with people like that. So he's gonna be managing it and afterwards, getting the cash flow, and that's how you get that great dividend yield.
Okay. Unfortunately, the questions are not stopping, so I guess we will
That's
just.
the question, guys.
But there are a couple of interesting questions. Let me see in the order in which they came. So we're getting a little bit into the nuts and bolts. In theory, an investor asks, I could purchase a duplex within a QOZ and take advantage of the tax benefits by waiting 10 years of appreciation. Am I correct? Or am I thinking about it too simply? I understand the question.
So you are investing in an opportunity zone, but you're not qualifying it. That's what it's called qualified opportunity zone. And that's why so to qualify it, you need to put in 100% capital improvements into that duplex. So you could tear down and build a quadplex if you get the permits, or you could make a luxury duplex, or maybe it's just a really shitty duplex in the first place and you want to just upgrade it a lot with high-end materials. Those are all things that could qualify it, and then you have to self-qualify it twice a year through a tax attorney like Steve. So that would be a way to do it. But by just buying something and sitting on it and buying something that's in an operating zone, that doesn't mean it's a qualified operating zone.
All right. To the investor who asked, what are the requirements to maintain the integrity of the fund? These are very clearly spelled out. Probably we can take that up offline, how to maintain the integrity of the fund, but we can definitely get back to you on that. And since it's an anonymous attendee, please do reach out to Eng or Tozy Capital and they can clearly explain what are the requirements. So another question, what is the average rate investors have received versus promised rate based on your prior history? 100% of promised rate, 80% or lesser?
It's been 100% or more. And I would like to say that almost every real estate investor in the past 5 years probably have made a good amount of money. I know people have lost money, but I'm just saying that it's been a good 5 years. So, and typically we can predict for worst case scenarios or worser case scenarios. And so we have some headroom to breathe.
Last three questions, everybody. An attendee asks, here's a scenario. As a limited partner, if I stay after 12 years, what's going to happen to the fund? What happens if the general partner wants to sell the property on the 12th year?
Yeah, so if we stay at 12 years and you are still in the fund, then you're still getting paid that dividend, and it should be stated. Yeah, distribution should be stated in the PPM. If it's 12% over 16%, you get that return.
A question from an investor: what is Tozy's OZ debt to equity ratio?
So typically for OZs, because it's mostly construction you can't leverage very highly. I wish I could. It's typically 65%. So 65% debt, 35% equity.
Okay. As a limited partner, how does Tozy communicate with us in the future?
If you are coming in from one of my Facebook posts, then I will add you to our general email list. If you come from our general email list, you're getting communicated already. And then if you guys sign up in that link that I shared in chat, there that shows the offering, but you can also sign up as an investor, and then you will be provided access to featured deals as well if they're relevant for you guys.
I sort of empathize with the investor. I think the investor was asking, once I've become a limited partner, how are future communications done? Once I've invested in Tozi, how's that?
Yes. Yeah. Sorry, I misunderstood. Yeah. So typically we provide initially a expectation setting email after we close the property that will allow you to understand when distributions will happen, frequency, although most of these things should have been communicated before and generally will be. Um, and then afterwards, we try to provide monthly updates if there's relevant updates. For some of the OZs, there might be limited updates while we are waiting for all the permits to finalize and materials to arrive to break ground. But we should be providing updates. And of course, you can always reach out to us. We love talking to our investors. And sometimes we also have quarterly investor webinars for ongoing deals as well.
And the updates, as well as the signed subscription documents, they are all available in the portal, the investor portal, as well as all kinds of communications. That's something that's important. That way you don't have to download and save it on a machine and get worried about that. With that, we've come to the end of questions. An investor wants your help to actually share the link for the past offering that you shared with people in the follow-up email. They want to just look at the past offering. So that's homework for the Tozi Capital team to just add the link of the past offering as well. So ladies and gentlemen, with that, we've come to all the questions. Hopefully they were answered to your satisfaction. Feel free to reach out to Eng or the Tozi Capital team. But with that, we have come to the end of this webinar on opportunity zones. Thank you so much, everyone, for participating, for your questions. More than anything, it is your questions that make the right answers or the interesting answers, because after all, this is for educating each and everyone. With that, I'll hand it off to Eng for closing remarks, but we are done with questions.
Thanks, guys, for staying the whole hour and a half and asking a lot of questions. I am always happy to answer more questions. I know sometimes this can be theoretical. When you actually do it, you'll probably have more questions. And we'll try to provide as much detail and information as possible. And we'll have resources at your disposal to help as much as possible. All right. Well, thank you, everybody.
Thank you, everyone. Have a wonderful evening. Thanks for joining.